is Horizons, Middle East and Africa. Our top stories this morning. The race is on to replace Justin Trudeau, who's stepping down after 9 years as Canadian Prime Minister. Former Bank of England boss Mark Carney says he's considering a run. Tencent and CATL shares fall as they deny having ties with the Chinese military, saying that the U.S. made a mistake by adding them to a Pentagon blacklist. Plus, the dollar in focus after Donald Trump denies a report that his threatened tariffs may be watered down. It's just gone 8 a.m. across the Emirates. I'm Christine Burke in Dubai, in for Jumana Bersachi. Well, guys, it was a really big day yesterday. We had a lot of action, not only in markets, but just as we consider all of the headlines. We had conflicting things coming across around Donald Trump's potential trade and tariff policies. We had, of course, that political fallout in Canada. We also had a surprise resignation from a critical post at the Fed and more Fed speak that really doubled down on the rhetoric that we've heard that policymakers will take a more cautious path toward cutting interest rates over the course of 2025. If we look at how markets are shaping up as we consider all of that and move into the trading day ahead, you can see here we are pretty much unchanged, or we are unchanged at this particular moment in time on U.S. equity futures. That's after stocks saw a second day of gains on Wall Street yesterday, led, of course, by big tech. I also want to talk about the dollar because that is a place where we saw a lot of volatility, a lot of action yesterday. We are weaker today on the session. That would bring us to a third day of losses for the greenback. And the reason that I want to note this is because we are seeing just a lot of movement in this market in reaction to all of the varying headlines that we're getting around Trump's tariff policies. And also, I want to jump back up here to the U.S. 30-year yields because yesterday Treasuries also a big market where we saw a lot of action. The 30-year yields holding above 4.8% this morning, the highest level that we've seen in more than a year. We'll talk more about oil later, but just note that we are heading a bit lower today. Now, let's go to big tech and talk about Nvidia, because this is a stock that we often love to talk about. The market is kind of obsessed with Nvidia. And so when we looked at this chart here yesterday, Nvidia shares rose to a record yet again, and that brought the company's market cap to almost $3.7 trillion. What that means is that Nvidia is now close to overtaking Apple once again as the world's biggest company by market value. And this is all the more relevant today because we have the Consumer Electronics Show kicking off in Las Vegas. And Nvidia CEO Jensen Huang actually just spoke about an hour ago, giving the keynote address. We will talk more about that later. But for now, let's get over to Asia because Avril Hong is standing by in our Singapore studio for us. So, Avril, good to see you as always. What's moving and shaking in your part of the world today in Asian markets?
There is so much that's moving and shaking today, Christine. I mean, the region's benchmark is higher. It's a mixed bag. This is mostly driven by the chip stocks driving the Nikkei. We saw Tokyo Electron jumping 10% thereabouts. And this is as the AI theme and trading behind it really gets reinvigorated with Nvidia at those record highs. Jensen Huang at the CES in Vegas. But apart from that, the focus on the market today has really been what's happening in China with these firms being put on the U.S. Defense Department blacklist, which doesn't necessarily mean sanctions, but could deter U.S. firms from dealings with them. Those two firms in question that have been the focus of markets today are Tencent, the world's biggest gaming publisher, and CATL. This is, of course, the top among the top EV battery makers in the world. So the Tencent stock is really bearing the brunt. It sank as much as 7+%. And dragging the broader indices. The Hang Seng is down, and where the levels are right now on the Tencent stock also means that a lot of the gains that have been driven by the stimulus package in September have been erased, and this could also risk what we're seeing broadly on that stimulus-driven rally in Chinese stocks as well, Christine.
Avril, thanks so much. That's Avril Hong in our Singapore studio. Well, after more than 9 years in power, Canadian Prime Minister Justin Trudeau is resigning, bowing to sagging approval numbers and a rebellion within his own Liberal Party. The 53-year-old will remain as Prime Minister until a new leader is selected, with Parliament suspended until March 24th while that process is underway. For more on this, Bloomberg's Vancouver Bureau Chief Thomas Seal joins the conversation now. So, Thomas, you must be keeping pretty busy over there with all of these developments. This is quite a fall from grace for Justin Trudeau, who really was the golden boy of Canadian politics for such a long time. We have seen for the past few months that he had diminished support. Walk us through how we got here.
As you say, he was the champion of the sort of progressive cause and brought the Liberal Party back from one of their worst ever, I think maybe their worst ever election performance to, a majority in the House of Commons 9 years ago. And he's hung on to power for 9 years. And what's done for him? Fundamentally, there have been issues, there have been scandals, there have been resignations, but the big sweeping force that's ripping incumbents out of their seats is inflation, cost of living, economic angst, call it what you will. It's hitting Liberals like Justin Trudeau. It's hitting Conservatives like the UK Conservative Party, who were ejected in July. Canadians feel poorer. They are paying more for groceries, and wages haven't always kept pace. And some of Trudeau's decisions have arguably not helped, such as not having the infrastructure ready or housing ready at the same time as having record immigration. I think a problem which he himself acknowledged.
Yeah, and Thomas, what happens next? What is the process for the Liberal Party to elect a new leader and ultimately a new Prime Minister of the country?
Yeah, last time around when they selected Justin Trudeau, it was a long drawn-out process. I think fundamentally from the resignation of one leader to the appointment of Trudeau, it took over a year. Obviously, with Donald Trump entering the White House in 2 weeks, they do not have the luxury of time. They have triggered the leadership contest, and what that means, based on the previous process, is there's a sort of a vote of all members of supporters of the party. There's a formula which means that you have to draw support from all parts of the very large country that is Canada, and there's runoffs until someone has a clear winning amount of votes. It's possible that they could tweak the rules. They tweaked the rules last time, and so we're waiting to see how that plays out. And people are starting to really put themselves into the process semi-formally, or saying that they're thinking about it. This evening here in Canada, it's still Monday evening, Mark Carney, the former Bank of England, Bank of Canada governor, said that he was exploring a run. And we should say at the same time, he is the chair of Bloomberg Inc. and Brookfield Asset Management.
Thanks for that disclaimer, Thomas, and thanks for breaking all that down, and good luck as you cover what is a fast-moving story here. That's Bloomberg's Thomas Seal, our Vancouver bureau chief. Well, let's keep the conversation now and go to Ottawa. We are going to speak to Laurie Turnbull now. She is political science professor in the Faculty and Management Department at Dalhousie University. So, Laurie, great to have you with us today to unpack these developments. We heard there from Thomas about what the process might be as the Liberal Party looks to elect a new leader. Let's talk about some of the frontrunners here. We just heard from Mark Carney that he is considering a potential run. Walk us through some of the names that are on your radar.
Okay, so Mr. Carney for sure. Also, Chrystia Freeland, who was the finance minister and the deputy prime minister to Justin Trudeau. Her resignation a few weeks ago was really what kind of blew the lid off of everything and really pushed the prime minister to make a decision about where he was. I think before that, there had been pressure mounting, but her resignation was just kind of the end of it all. And so I think that was kind of her way of not so softly launching her own leadership bid. So I think we'll see her name. Dominic LeBlanc is also a minister in Trudeau's cabinet and took over as finance minister when Freeland left. And so I think he's probably someone who you will see throw his hat in the ring. Christy Clark is a politician who was the premier of the westernmost province in Canada. She's reportedly thinking about a bid. Melanie Joly, the global affairs minister, she's thinking about it. Anita Anand, who has been defense minister, now she's transport minister. She's thinking about it. Before I joined you this evening, I've heard that Karina Gould is thinking about a bid. She's also a minister. So lots of people inside the Trudeau government thinking about making a run at it.
Yeah, you've mentioned a number of names there that I had not even heard, so thanks for sharing all of that. Now, if we look forward into the next couple of months and we consider the time that comes when we do get a Liberal leader and a new Prime Minister, when do you think that we will see a national election actually called?
So, okay, as part of this whole thing, the Prime Minister has requested a prorogation of Parliament. So Parliament won't meet during the time that the Liberals choose their new leader. However, they have to go back to the House March 24th. Because they need to approve supply. And if they don't, then people won't be paid, they won't get their pensions, they won't get their EI benefits, things like that. And so nobody wants that kind of a shutdown. And so the Liberals' time for choosing a new leader is actually quite short. And when they come back, it sounds like the opposition parties are quite eager to defeat them. And so that'll be the end of March. The longest legal time for a campaign in Canada is 50 days. And so I think we'll probably see an election in May.
Interesting. And talk to us about the timing of Trudeau's resignation. This is a delicate time for Canada, given that we are moving into 2025, where we're going to see a new Trump administration and potentially more hawkish policies toward Canada and around the U.S.-Canada relationship. How do you expect that all this political uncertainty will play into Canada's positioning in its relationship with the States?
I think the president-elect is quite aware of the fact that Justin Trudeau is in a precarious position and has been for a while in terms of not being completely supported by his own party and not having the support potentially of the House of Commons. I think Trump is again aware of that, and he likes to exploit that. He likes to poke the prime minister about that on X and social media and things like that. I suspect that will all get worse. But more importantly, I think it puts Canada in a difficult position with respect to making decisions about how to deal with tariffs if they come through. So even though Trudeau at this point is a prime minister on his way out, it would be fair to say, he's in a lame duck kind of position. He's not going to be able to act that way, I don't think, for the next 2.5 months, because Canada will have to respond to whatever the U.S. is going to do if these tariffs come through. Canada will have to figure out, how are we going to respond to that? How are we going to potentially diversify our trade relationships, try to solidify our supply chain, how to fortify our own industries? How will we respond to this? We can't wait as a country for the Liberals to figure out who their leader is. And so the Prime Minister will continue to play a big role in shaping Canada's place in the world and in defining this relationship with the U.S.
Yeah, and it'll be interesting because, of course, a lot of those policies will also be shaped by whether the Liberals stay in power or the Conservatives come to power, as that is expected to be a competitive election. Laurie, thanks so much for joining us. That's Laurie Turnbull, Professor of Political Science, Faculty of Management at Dalhousie University. Well, still ahead, hear why AVM Capital sees the dollar staying strong and U.S. yields remaining range-bound. More on their market strategy next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Christine Burke in Dubai. Asian shares have made gains after Wall Street rallied for a second day. Meanwhile, the dollar narrowed losses as Donald Trump denied a report that his threatened tariffs may be watered down. Trump has promised 10 to 20% across-the-board tariffs on all imported goods and a levy as high as 60% on Chinese goods. Let's bring in Ashvin Murthy, founder and CIO at AVM Capital. Ashvin, thanks for joining the conversation this morning. I want to first start on tariffs because we had kind of conflicting signals coming out yesterday on what we should expect from Trump's trade policies. The Washington Post saying that perhaps Trump would only put tariffs on critical imports into the U.S. and that they'd maybe only be 10%. Trump then denied those reports flat out. What are you expecting that we will see when Trump takes office and puts these expected policies in place?
I think, it's something we need to get used to. Over the next 4 years, there are going to be lots of headlines about what Trump might be doing or what he's going to say. We sort of went through that over 4 years in his first term, and a lot of those headlines were denied soon after they were published. So I think, traders and investors need to be prepared for this sort of to and fro in terms of headlines. In our view, the tariffs are going to happen. If you look at his playbook, it's generally to be aggressive, to start aggressive, and then maybe pare back some of those threats once they make a deal. So I think the tariffs are going to start soon after his inauguration. It might start with China and then start spreading into a universal tariff, which would require Congress to act on. But we should be hearing from him very quickly after inauguration.
So if we do hear from Trump very quickly and he does move on this, do you see that reigniting inflation in the U.S. and presenting an issue for the Fed? And if so, how quickly might it actually have the impact on the inflation figures that we see coming out of the States?
It's an interesting question. So I think, even without the tariffs, we've seen inflation base in the last quarter, and we're expecting inflation to drift higher over the next 6 months, even without the tariffs. So I think the tariffs, it's a big question mark on whether they're going to really impact inflation as much as many people think. In the first term, we did not see too much of an impact from inflation. It depends what happens to the currencies of the other countries. If they devalue, then the impact of tariffs goes down. But I think, overall, it is definitely a tailwind to the slight drift higher in inflation, but I'm not expecting it to explode higher and go beyond 3%.
And quickly, what is your view on the path for Fed rate cuts? Do you see, are you in line with the Fed in that you see 2 rate cuts, or are you more in line with market expectations, which are really only baking in 1 25 basis point cut and maybe a little bit more than that?
I think they're on hold till June at least. Looking at the inflation trends, something we started looking at the Q4 last year. If you look at the trends in prices paid, new orders in the US, they're all pretty strong. And, if the unemployment rate does not trend higher, you're going to see inflation drift higher with growth remaining solid. So there's no reason for the Fed to cut further. They delivered 100 basis points of cuts when financial conditions were easy. So financial conditions have eased even further. We don't expect them to cut unless the unemployment rate hits higher. But going into the second half of this year, we do think growth will probably peak in the first half and start to head lower. So we could see a couple of cuts delivered in the second half of the year.
Yeah, and we do get the U.S. jobs report Friday, so I guess that'll be the next thing the Fed is looking at. Let's talk about the BOJ, because there's a lot of uncertainty in a lot of different minds in different corners in the market about where the Bank of Japan will take rates next. How do you think that the Bank of Japan is looking at the policy path, especially considering that when I'm looking at the terminal this morning, we have the yen trading around the weakest level since July now?
I think the BOJ, over the last 2 years, they've started to react and get more hawkish whenever dollar yen went too high and too fast. We got some comments again from officials this morning once we crossed 158. So I think the BOJ is only going to hike if dollar yen starts spiking or starts moving up too quickly. And so, their reaction function now is predominantly they predominantly look at the yen and decide what they're going to do. I don't think there's a need to raise rates now from an inflation standpoint. They're enjoying high nominal growth. Things are looking good in the business community. And when we look at the large cap Tankan surveys, it's not something they want to ruin. So the only reason they're ever going to hike rates at this point in time is because the yen weakens too much.
Right, and let's go broad markets for just a moment. I want to ask you, what do you see as being the biggest risk for 2025, broadly speaking? In terms of concentration risk right now, I think it's in the equity markets within the Mag 7. So I think the markets cannot afford a deceleration in growth or profits within this sector. It's become the only game in town in the equity markets. They've been outperforming a lot over the last 2 to 3 years. So, if that stops, if that only game in town stops, that could be impacts on different parts of the markets. Cross-asset impacts on rates, on FX. A lot of the capital surplus in many countries, a lot of that is recycled into the US, and that ends up in the Mag 7. So if they start to do badly, we could see an unwinding like we saw at the end of the dot-com bubble. Yeah, Magnificent Seven is so important, and Nvidia in particular. I actually heard a quote yesterday on Bloomberg TV from Jim Bianco of Bianco Research. He said that Nvidia CEO Jensen Huang is the most important person in 2025 in terms of investor returns. So I think that really does say a lot about just how important these big tech names have become. Ashvin, thanks so much for your time. That is Ashvin Murthy, founder and CIO at AVM Capital. Well, coming up today, next, we are going to be talking about Saudi Arabia and its plans for oil prices. The kingdom raised its prices for buyers in Asia as the world's largest crude exporter sees tighter supply. We'll get more on the energy markets later this hour. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Christine Burke in Dubai. Well, AI has been the dominant tech trend since ChatGPT was launched more than 2 years ago. It's a theme set to reign supreme into 2025, though it could take a different shape as new applications emerge. More from our Asia tech correspondent, Annabelle Drulers.
Chips, data centers, energy and spending from big tech. These have been some of the key metrics to understand demand around AI. Now the focus may broaden beyond infrastructure and chatbots to new uses, including scientific discovery.
I think scientists are starting to use it as a tool and apply it in their technology. And by doing that, there's probably going to be a lot more breakthroughs that you'll hear about. But I think that we have, from the public perspective, done a bit of over-indexing on large language models.
Indeed, 2025 could mark a further shift to small language models instead, especially as concerns build over the huge strains that AI is placing on power grids worldwide. That's putting the spotlight on a novel approach to training AI tools that could democratize access to cutting-edge technology.
The new machine learning paradigm will be so-called model over models. What we are talking about is actually a small language models targeting for specific domain. When this decentralized version populated, many more people, many more AI researchers, or democratized, more people will be involved. I think that's very important.
Such an approach could also be critical for integrating AI further into personal electronics like phones and PCs.
I actually would consider this technology to be the foundation for the future that people can have their personalized small language models.
At a device level, there's also set to be a greater focus on what's known as agentic AI, which refers to AI systems that exhibit agency or autonomy.
You're going to start seeing AI being able to do more multimodal, multi-capable things. And I think that the individual might start to feel that a little bit more. They might to see it in their product.
On the regulation front, President-elect Trump could mean less red tape for US tech giants, though that doesn't mean that any lead over China in AI will be sustained.
What we start to see is at the US level, this frontier area of where a select few companies are running away with it, and they look like they're significantly in the lead. But throughout 2024, in China, what we're starting to see is a lot of big, powerful models that are coming out in a more open source community, and the base of China is wider.
The race for AI supremacy in AI is by no means settled as we head into a new year. Annabelle Drulers, Bloomberg News.
This is Horizons Middle East and Africa, our top stories this morning. The race is on to replace Justin Trudeau, who's stepping down after 9 years as Canadian Prime Minister. Former Bank of England boss Mark Carney says he's considering a run. Tencent and CATL shares fall as they deny having ties with the Chinese military, saying the U.S. made a mistake by adding them to a Pentagon blacklist. Plus, the dollar is in focus after Donald Trump denies a report that his threatened tariffs may be watered down. Well, it's just gone 8:30 a.m. across the Emirates. I'm Christine Burke in Dubai. Let's get a check of these markets because we're not really looking either risk on or risk off this morning. We're just a bit neutral, if I'm honest. Looking here at the board, you can see that U.S. equity futures are unchanged so far as we head into the day. That is after a second consecutive day of advances on Wall Street, which was led by big tech. We are going to be talking a lot more about big tech and Nvidia in particular in just a moment, so stick tight. Also, you want to look at the U.S. 30-year yields. We are seeing yields come back down a bit today, but yesterday we had a pretty big jump as traders considered the potential for more borrowing out of the U.S. And we also got a number of Treasury auctions that affected trading in the market. The 30-year yield now hovering around some of the highest levels in more than a year. And the dollar in focus as well. We are weaker this morning, heading potentially for a third day of losses. A lot of the movement coming, of course, on the back of the headlines around what is happening with Trump policies. Now, let's go back back to talk about Nvidia quickly, because Nvidia shares rose to a record high again yesterday, and that took the market cap of the company back towards $3.7 trillion. Nvidia now very close to overtaking Apple once again as the company with the world's largest market cap. And we did just hear from Nvidia CEO Jensen Huang as he opened up the Consumer Electronics Show in Las Vegas. He unveiled new chips, software, and services to help the company stay ahead in AI computing. And he also announced that Toyota is now a customer for Nvidia's autonomous driving AI products. So something to keep an eye on as we move ahead into that major tech show, which is getting underway in Las Vegas. Well, let's check in on how markets in Asia are faring now. Avril Hong is standing by in our Singapore studio. So, Avril, what are you watching? We've been talking about AI, technology, semiconductors a lot today.
Yeah, and we've seen those chip names moving higher against that backdrop. But I thought I'd rake through what we're seeing in FX in Asia as well, because it's really been still about the resilience of the US dollar, though that took a step back just a day ago with those reports that Trump is considering paring back some of his tariff plans. Although eventually the dollar did pare some of those losses, it was the steepest decline in 6 weeks. And still, we're seeing it moving off the week's high. So that's provided a bit of relief for Asia currencies, including the Korean won, top gainer today. A bit of relief as well for the Chinese yuan. Today, the PBOC did deliver another strong fixing, so that was supportive of the Chinese yuan. But what is not benefiting is the Japanese currency. And it's for a second day the biggest decliner in the region, and to 6-month lows. That's drawn verbal intervention from the finance chief CATL. But as our MLive colleague Garfield Reynolds has been writing out on the blog, it's almost as if the more jawboning you get, the more there's a sense of diminishing returns, because traders increasingly think that their bearish yen bets are going to be panning out. So the yen really on the back foot today. Christine?
Yeah, thanks so much, Avril. That's Avril Hong, who is in Singapore for us there. Well, the U.S. has blacklisted Tencent and CATL for alleged links to the Chinese military in a surprise move weeks before Donald Trump takes office. For more, let's bring in Asia EcoGov reporter Rebecca Chung-Wilkins. So, Rebecca, bring us up to speed on this latest blacklisting. It seems like every day we're talking about another development in the relationship between China and the U.S. to the downside, though, really.
Yeah, this is a fresh new handful of US firms, or so rather Chinese firms, getting caught up in the tensions and the crosshairs between US-China tensions. So among other Chinese firms, Tencent and CATL, which is, of course, the battery maker, has been added to the Pentagon's blacklist of firms with alleged links to the Chinese military. Now, it's worth saying that just being added to this list in the first place doesn't inherently mean there are any kind of sanctions or immediate restrictions. However, US firms are essentially discouraged from doing business with the companies on this list. Now, Tencent, CATL, and some of the other firms have all rejected this allegation. They say essentially that this is a mistake, and it does look like they will sort of try and negotiate with the DoD to be removed from this list. But it's a pretty time-consuming process. And in the meantime, I will say it's really dominated trading floors and discussions with my sources and investors today.
Yeah, so what has been the market reaction? You mentioned that this doesn't mean that these companies are going to be specifically put under any sanctions. It's more just a discouragement of business, but the market is reacting strongly.
That's right, Christine. We aren't really seeing that sort of moderation or wait-and-see approach in markets. We saw a pretty steep sell-off overnight in the US ADR, and then coming in today, Tencent down about 7%, 6 to 7% or so. CATL not quite as bad, I think about 3% so far, as you can see on your screen, but still some significant losses. And part of the reason why this is really dragging down both the onshore indexes and the offshore indexes indexes for China is because Tencent in particular is a really heavy weighting. So it is in fact the heaviest weighting of equities in two of China's key benchmarks. And so we really are seeing this quite strong ripple effect through the markets, although we do have some commentary from strategists coming through saying, this is a little bit premature, we should wait and see. And in fact, we spoke to one guest from a Singapore-based hedge fund this morning saying this might even be the time to buy when it comes to Tencent, that it does look quite cheap because longer term, there is perhaps this theory that Tencent will not remain on that blacklist.
Well, buy the dip there, I guess, then. That's Bloomberg's Rebecca Chung-Wilkins. Thanks so much for all that, Rebecca. Let's get more on the trade war that is heating up between China and the U.S. Emilie Bodoin is founder and CEO at Pure Lithium, and she joins us now from Boston. So, Emilie, it's great to see you with us. We were just there talking about this ratcheting up of tensions that we're seeing between the U.S. and China, and battery metals have certainly come into the conversation. How do you view the potential moves by the incoming Trump administration, and what are your expectations for what we will see for trade and tariff policies that may affect the battery supply chain?
Well, there's a lot that's going to affect the battery supply chain. And first of all, tariffs, unfortunately, are not going to help the battery supply chain in the United States because we don't have one, right? So Bloomberg even reported that the graphite industry is asking the U.S. government for a 900% tariff. So what does that say? That means their cost of production is skyrocketing. And with batteries, the price performance ratio is all that matters. You're not going to get American or any consumer to pay more for something simply because it's produced in the United States. So if we want batteries, the reality is 77% of the main component, lithium ion battery, is graphite, and it's all produced in China. 77% of it is. So tariffs are only going to hurt the U.S. battery industry.
So then does the U.S. even have a shot here at being competitive in this industry? Is that even what this is about?
We absolutely do have a shot, and it's not going to be copy-paste China. We are never going to catch up to China with lithium ion. We're never going to compete. We have to invent our way around this problem. And the U.S. is very good at innovation. So there are battery technologies like lithium metal that can leapfrog lithium ion. And the United States has sources of lithium. They have sources of vanadium. You can make a complete battery with North American sources and Saudi Arabian sources, but it's going to look different than today's lithium ion battery.
What are the big names, or what companies in the U.S. stand to gain from this, to potentially lead this push into more innovation and into new products beyond lithium-ion batteries?
Yeah, I mean, any company that's working on advanced next generation batteries, for example, but it depends, on the cathode chemistry that they use, because cathodes are mainly produced in Asia as well. So, for example, our lithium metal battery uses lithium from any kind of lithium bearing brine, and we use vanadium. And these two things are co-located frequently. The battery supply chain as it is today with lithium ion cathodes, your NMC and LFP, they are primarily produced in China. China dominates the battery material supply chain. They just do. That's how it happens. So if America is going to catch up, or the Middle East is going to start, they need to leapfrog with new technologies.
And what are you doing at Pure Lithium specifically?
Specifically at Pure Lithium, we have lithium metal battery technology, and we take any kind of lithium-bearing brine and turn it directly into a battery component that replaces graphite in one step. So that's pretty transformational. This is an old chemistry. It was invented in 1977 by Stanley Whittingham, who won the Nobel Prize for the invention of the lithium-ion battery. So it's just a technology that we are looking at and trying to make it very realistic and cost competitive today. So it's a technology that's beyond lithium ion. The battery will have twice the capacity of today's lithium ion battery, and you'll be able to build it with locally sourced materials, anywhere you can find lithium and vanadium.
And if we think about how Trump's potential tariff policies affect the green energy transition and how all of this plays into what happens with the transition, how do you view all of that?
Well, it will be interesting to see what happens. I mean, apparently the president likes batteries now. He's close friends with Elon Musk, which is great. And in this day and age, almost everyone has a cell phone and uses batteries. So it's impossible for him to be president and not embrace batteries to some degree. So, I would be expecting some very interesting moves by the U.S. Of course, we can't possibly predict what is going to happen, but tariffs are only going to actually hurt any attempts to domesticate. We just don't have a battery material supply chain in the United States. And that's going to have to change if we're going to get into the battery race. So it will be very interesting to see what happens. I'm just very glad that he's gone on record saying that he likes batteries now. That's a good sign for us.
Well, thanks so much, Emilie, for coming on and sharing all of your thoughts on that. It will be interesting indeed, and we hope to have you back sometime to talk more about it. That's Emilie Bodoin, founder and CEO at Pure Lithium. Now, for a look at some of the other stories that we are following, Bridgewater Associates dismissed 7% of its workforce on Monday, according to Bloomberg sources. The cuts affect about 90 employees at the world's biggest hedge fund, which is seeking to remain lean and maintain the flexibility to hire top talent. In a statement, Bridgewater says it has been focused on, quote, rapid evolution and is holding a high bar and keeping the organization nimble. Sources say a consortium backed by Apollo Global Management and BC Partners is close to acquiring a controlling stake in GFL's environmental unit. The deal could value the business at about $5.6 billion. GFL may retain an option to buy back the shares at a later date. Prices for the most sought-after used watches from top Swiss brands Rolex, Patek Philippe, and Audemars Piguet fell again in 2024, hitting fresh 3-year lows. The Bloomberg Subdial Watch Index declined nearly 6% last year. It tracks prices for the 50 most traded models by transaction value. The market for pre-owned luxury timepieces soared in 2020 and 2021 during the pandemic before suffering a sharp pullback in 2022 amid slowing economic growth and higher interest rates. Coming up, Eurasia Group publishes its annual report predicting the top global risks for the year ahead. We delve into the findings next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Christine Burke in Dubai. The global research firm Eurasia Group has published its annual report predicting the top global risks for the year ahead. Let's get more with Bloomberg's Ondiro Oganga. So, Ondiro, good to see you. What are the top risks from Eurasia Group, in their view, heading into 2025?
Hi, Christine. So there are a couple of risks, and let's begin with the U.S. President Donald Trump is perceived to replace civil servants in departments of justice and also FBI with loyalists who are aligned to his vision. And what this is going to do is it's going to erode checks and balances for the executive and amass so much power around one person who makes decisions that can tip the scales of balance globally. There's also something to be said about his policies. They're likely to cause inflation. They're likely to slow down growth. Higher interest rates will strengthen the dollar but make American exports unattractive to the market. And also immigration, which was a really sensitive issue during the campaigns. There will be deportations during Donald Trump's tenure, but the scale of these deportations will determine the impact on labor force, on wages, and also on consumption. Then there's also the tiff between U.S. and China. President Donald Trump intends to pick that trade war exactly where he left it. There could be tariffs on China to try and push them into giving concessions, but China is going to stand strong on his stance so that it sends a message both internationally and domestically that they're still very strong and cannot be pushed around. Then there's also Russia, the invasion of Ukraine, which has made them look like a rogue player in Europe. And what is going to happen is the tiff with Europe is going to continue, but they're likely to strike military partnerships with Iran and Iraq and North Korea, and Middle East is likely to remain combustible in 2025. Iran has been made weak because of the consistent attacks on Hamas, Hezbollah, and the force of Bashar al-Assad. But they have weapons, they have drones, they have missiles, and they could be provoked into another exchange with Israel, depending on what these parties do to them.
Yeah, such an array of risks there, and also so many different pathways forward that could stem from those risks, which I guess just underscores why the narrative out there at the moment is that 2025 could be turbulent, it will be uncertain, a lot of known unknowns. What will be the likely implications that arise from some of these risks?
So what we're likely to see is that geopolitical tension is going to increase, conflict is going to increase. We are likely to see more rogue players, because also it's important to know that US and China have their own internal issues going on, and none of them is willing to step up and drive international agenda and enforce international order. So that is what we're likely going to see. Also, the trade war between US and China, these are some of the biggest and most powerful economies on the global stage. So if they cough, every other person gets a cold. It's likely to create global economic recovery, a short circuit in that, and also it's likely to create geopolitical fragmentation. And what happens is all the economies that were hoping for a recovery will have to contend with either slashing their spending or increasing taxes.
Ondiro, thanks for all of that analysis. That's Bloomberg's Ondiro Oganga. Now for a look at some of the other stories that we are following. ArcelorMittal is closing its steel-making business in South Africa, leaving around 3,500 jobs at risk. The Johannesburg-listed subsidiary of Lakshmi Metals multinational group says production will likely stop by the end of the month. The company blames persistently high logistics and energy costs coupled with insufficient government policy interventions. The move will come as a blow to South Africa's business-friendly coalition government as it tries to revive economic growth. Barrick Gold says it will have to halt mining in Mali soon if the government does not stop disrupting exports and operations at its mine. The world's second biggest gold producer is locked in an acrimonious dispute with authorities over how to divide revenue and profit. The miner says an interim attachment order has been issued against the gold stockpiles on site. This comes as the company already faces an ongoing block on exports. Now, Barrick has initiated arbitration proceedings against the government and is seeking a resolution within a week to avoid suspending operations. And coming up, we're going to talk more about commodities. Saudi Arabia raises its oil prices for buyers in Asia as the world's largest crude exporter sees tighter supply. More on the energy markets next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Christine Burke in Dubai. Saudi Arabia is raising oil prices for buyers in Asia next month in a sign the world's largest crude exporter sees tighter supply in its largest market. Saudi Aramco says the price for its main Arab light crude grade will be at a premium of $1.50 a barrel to the regional benchmark. Bloomberg's Middle East energy reporter Anthony DiPaola joins us now. So, Anthony, great to see you this morning. Let's talk about these OSPs. This is the first increase that we've seen in a number of months. Markets tend to either take that as a sign of bullish demand outlook or that there's tighter supply. What was it that drove the increases this time around?
Good morning, Christine. Yeah, the oil prices did go up. That was the first increase in 3 months. So the last 2 months have been decreases. And yeah, like you said, the market takes that as a sign that basically when they increase the prices, the Saudis think that the market can bear that increase. So that there's enough demand that they will take that increase. So this comes on the back of OPEC continuing to delay its increase in production. So we're keeping that oil off the market. That's keeping the market a little bit tighter where those heavy sour barrels, which is what comes out of the Middle East mostly, are being restricted. And that's what a lot of the refiners in Asia, mainly China, which is the biggest market for Saudi Aramco, that's what those refiners use mostly. So it's tightening the supply specifically of those barrels, and that's allowing that price increase. Plus, we're coming out of kind of shoulder months. February is still a little bit of a shoulder month where we've got some sluggish demand, but we get to pick up kind of coming into the spring there. So the Saudis are seeing that demand tightening just a little bit as the OPEC Plus group continues to squeeze that supply.
Yeah, and you make the point there of OPEC bringing less supply to the market. We did get December production figures overnight, and that does show a pullback. But what does it tell us about compliance? Are we seeing a more disciplined OPEC?
Yeah, well, compliance has to be the first stop on the OPEC plus train here in terms of trying to control issues. We're getting a lot of speculation about what OPEC is going to do down the road, but really they need to tighten up and make sure that the members do comply with those cuts in order to get that result that they want. And that result is supporting the price, keeping stockpiles from building so that they can support a price at or higher than where we are now, really.
Yeah, and yesterday there was a report from Morgan Stanley saying that if we see Brent go below 70, OPEC will have to make more supply cuts. How does that play into what else you're reading, very quickly?
Yeah, well, there's so much to go into that because we don't know what's going to happen with Trump's policies coming in. We don't know what's going to happen on potential additional sanctions on Iran or Russia that could take off, or in the case of Russia, if there's a ceasefire, even increase some of those supplies into the markets. We've got a lot of moving factors there, and people are speculating, is OPEC going to make deeper cuts if the price falls? Or if the price falls, are they going to abandon those cuts, flood the market, go for market share, drive some higher cost producers out of the market? So these are the big questions that we've got coming ahead in 2025.
Yeah, OPEC has a really delicate balancing act at the moment, and so much uncertainty around Trump and what he plans to do with drill baby drill as well. So thanks so much, Anthony, for joining us today. That's Anthony Di Paola, Bloomberg's Middle East energy reporter. Thanks so much. Well, as we prepare to wrap up the first hour of Horizons, let's get a check of where these markets are. Lots of red there on the screen, although not big moves that we're seeing. But S&P 500 futures, NASDAQ 100 futures, both pointing lower after a second day of gains on Wall Street yesterday. Also, I want to note that Euro Stoxx 50 futures are pushing a little bit lower. We do get European inflation data out today that is going to be a focus of the market there. We had German inflation and Spanish inflation data yesterday that came in hotter than the market may have expected. And so perhaps that took a little bit of heat out of expectations that the ECB may deliver bigger rate cuts in 2025. So that is where we stand at the moment. That's it for the first hour of Horizons, Middle East and Africa. I'm Christine Burke in Dubai. Stay with us for the second hour as Jennifer Zabazaza joins me in Johannesburg. This is Horizons, Middle East and Africa. Our top stories this morning. The race is on to replace Justin Trudeau, who's stepping down after 9 years as Canadian Prime Minister. Former Bank of England boss Mark Carney says he is considering a run. Tencent and CATL shares fall as they deny having ties with the Chinese military, saying the U.S. made a mistake by adding them to a Pentagon blacklist. Plus, the dollar in focus after Donald Trump denies a report that his threatened tariffs may be watered down. Good morning. It's just gone 9 a.m. across the Emirates. I'm Christine Burke in Dubai.
And I'm Jennifer Zabazaja in Johannesburg, where it's just gone past 7 a.m. Welcome to the second hour of Horizons, Middle East and Africa.
Well, let's get you set up with all that's going on in markets. You can see behind me on the screen here that we're seeing a little bit of red, but really not a whole lot of movement. U.S. equity futures this morning have been trading sideways and a little bit choppy over the last hour or so. That is after we had a second day of gains for equities across Wall Street yesterday, led, of course, by, you guessed it, big tech. We're going to see big tech come into focus a lot today as the world's biggest, or one of the world's biggest tech events. That is the Consumer Electronics Show. That gets kicked off today in Vegas officially. We're going to talk more about big tech in just 1 second. But first, let's talk about the U.S. 30-year yields. Yesterday, we had yields pop higher by quite a bit. Today, we are seeing a little bit of steam come out. The U.S. 30-year yields, though, still around 4.8%, some of the highest levels that we have seen in more than a year for the U.S. Treasuries market. This as traders anticipate more borrowing from the U.S. government over the course of 2025, and also after we got comments from the Fed that suggested we will still see policymakers take a cautious approach to cutting rates over the course of this year. Also, the dollar is just a touch weaker this morning, and same thing for Brent crude. Now, moving on to Nvidia, I promised that we'd come back to big tech, and here we are. Nvidia rose to a fresh record again yesterday, and when we look at how that's affecting the market cap, it's brought the company's market cap back up to almost $3.7 trillion. That means that it is close to overtaking Apple again as the world's biggest company in in terms of market cap. And we are going to be hearing more about all that's coming out of the Consumer Electronics Show in a little bit, so do stick with us for that. Now, let's get over to Asia and check in on how markets there are faring. Avril Hong is standing by in our Singapore studio. Avril, over to you.
Yeah, Christine, we're seeing Asia stocks catching a bit of a break. The region's benchmark rising about 0.5% today. This is mostly driven by the chip-related names. Thanks to Jensen Huang and Nvidia, we're seeing a gauge of Asia chip stocks rising to the highest level since August last year. But apart from that, it's also the weak yen that's helping to fuel some of the Japanese export-related names. The Nikkei is outperforming today. The outlier really are these Chinese stocks, as the gauges are really underwater, particularly on the Hang Seng that's back from the lunch break, pairing a bit of the losses of about 2% from earlier. And this is coming against the backdrop of the firms that have been put on a U.S. Defense Department blacklist. Doesn't necessarily mean sanctions for them, but this could deter some U.S. firms from dealings with these Chinese companies. We're talking about Tencent as well as CATL. For Tencent, it's sunk to its lowest level since mid-September. It is, after all, a benchmark heavyweight on the Hang Seng, so puts at risk some of the stimulus-driven rally that we've been seeing since late September. And that's what we're watching in the Asia Pacific. Guys.
Avril, thanks so much for all of that. Well, let's talk more about Canada, because after more than 9 years in power, Prime Minister Justin Trudeau is resigning, bowing to sagging approval numbers and a rebellion within his own Liberal Party. The 53-year-old will remain as Prime Minister until a new leader is selected, with Parliament suspended until March 24th while that process is underway.
I have always been driven by my love for Canada, by my desire to serve Canadians, and by what is in the best interest of Canadians. And Canadians deserve a real choice in the next election. And it has become obvious to me with the internal battles that I cannot be the one to carry the Liberal standard into the next election.
Well, for more on this, Derek Decloé, executive editor of Bloomberg in Canada, joins the conversation now. So, Derek, thanks for being with us. Walk us through the last couple of months and how we got here, and what were the key issues that really drove Justin Trudeau to need to offer his resignation?
I mean, Trudeau's been sliding in the polls for more than a year and a half. Really, it all sort of began around the middle of 2023, but the devastating blow happened last month when his finance minister, his longtime deputy, Chrystia Freeland, resigned on December the 16th with a stinging letter that said, it basically implied the prime minister was not really taking the threat of Donald Trump seriously enough, and that the government needed to focus on that and keep its fiscal powder ready for the possibility of a trade war, and that Trudeau wasn't doing it. So she said, we're at odds. I must leave, and that was a blow from which Trudeau simply could not recover. And ever since then, the drumbeat has gotten louder from members of his own party that you must go. You cannot win the next election, which is due now in this year in 2025. And today he finally gave in to that.
Yeah, so what happens next from here? We know that a Liberal leader will be picked at some stage over the next couple of months by March. Mark Carney has suggested he may throw his hat into the ring. Who are the frontrunners that are emerging at this stage to take over as not only Liberal leader, but the Prime Minister of Canada?
Yeah, I mean, Carney is obviously a very big name, former Bank of Canada governor, former Bank of England governor, huge economic resume. And a name you would maybe want to have out there leading your party at a time when economic anxiety is the number one issue for Canadians. But there's lots of competition for this job. There are a number of cabinet ministers. The finance minister, Dominic LeBlanc, who replaced Chrystia Freeland a few weeks ago, longtime Liberal, longtime ally of Justin Trudeau. The foreign minister, Melanie Joly, has been in the heat of a number of issues, including Ukraine and the Israel-Gaza conflict. She is seen as a contender, and there are a number of others. There's a fellow named Francois-Philippe Champagne. He's the industry minister. He's sort of been the government's front man as it sought to respond to Biden's Inflation Reduction Act and doing things to try to lure auto companies and others into Canada. Champagne who's from Quebec, has been one of the leaders of that. And he's very ambitious and seen as as someone who desires the liberal leadership. So, there's several from inside the government, and certainly a couple of very credible candidates from outside the government, including Mr. Carney.
Derek, we appreciate your time. That's Derek Ducrozet, executive editor of Bloomberg in Canada, and he joined us from Toronto. And we should note also before we move on that Mark Carney is chair of Bloomberg's board of directors.
Now, a highly anticipated event kicked off not too long ago with Nvidia CEO Jensen Huang announcing a raft of new chips, software, and services aiming to stay at the forefront of artificial intelligence computing. Huang took the stage at the CES show in Las Vegas on Monday to present the new lineup.
We used GeForce to enable artificial intelligence, and now artificial intelligence is revolutionizing GeForce. Everyone, today we're announcing our next generation, the RTX Blackwell family.
Let's get to Bloomberg technology anchor Ed Ludlow, who joins us from Las Vegas, staying up late for us. Ed, great to have you. So NVIDIA's big focus was really on Cosmos and other models and not chips. Talk to us about what it was that we heard from Huang and the significance of it.
Yeah, I think we spent the last few years trying to understand the modern definition of a computer, which is these high performance chips that go into data centers. And what NVIDIA is now saying is that they want to see more AI around the world. And so to do that, they're basically going to give it away, models of their own. And Cosmos is what they're calling a world foundation model. So if you think of a comparison like ChatGPT from OpenAI, that's a text-based model. It takes text inputs and converts text. And what NVIDIA wants to do is take AI and put it into robotics or autonomous driving, and text alone won't be sufficient. So it might not be sort of a go-to-market type thing, but it's NVIDIA showing that they have a high degree of competence on the software side while completely dominating the physical architecture, in other words, the chips and computers that underpin all of this.
And Ed, we also got some other announcements from NVIDIA, namely that Toyota was a new customer for its automotive products. Talk to us about what the market reaction has been, and not just to that, really broadly to what we heard from Huang.
Yeah, it was interesting. I think Toyota shares rose markedly in Japan, right? And NVIDIA has some kind of relationship with basically every car company in the world, like Jensen checked Tesla and Waymo, the autonomous driving arm of Google, for example. But what they want to offer is threefold. They have a literal chip, which they call AGX, which is a high-performance GPU based on Blackwell that goes into a car that computes all the data on board the car. But they also want to sell a package where they have data centers powered by NVIDIA chips that train the models used for autonomous driving. And Cosmos is a part of that as well, because the limitation that you have with autonomous driving is that you have to gather data from the real world. In other words, drive cars around that capture that data with sensors. What NVIDIA solves for with Cosmos is they make synthetic data. You literally type text into the model and say, create me a scene of video like you're now to your audience that depicts a certain thing, and it multiplies that. It makes variants of it, a multiverse version. And it's kind of a clever way of saying, here is some data that we created for you to train your models on. We'll sell that to you as a service as well.
Wow. And Ed, was this the keynote that investors were hoping for? We did also get some news about a new graphics card. Was this, it was very hyped up, this speech. Is this really what investors were looking for?
I honestly don't know. We'll wait and see when the market opens. We've spent so much intense time learning that NVIDIA is about data centers and NVIDIA stuff goes into data centers. But their history, the GeForce card that you're showing, is in gaming. Even as recently as 2022, that's where all the revenue was. And this latest generation is like super, super capable GPU, just as capable as the one in data centers, but much cheaper, and is something for individual developers, individual consumers even, which is why they're doing it at CES. Whether the market gets that, whether they tie it to the AI story that's the 100 billion in data center revenue and the hype we've seen in the stock, I honestly don't know, but we'll get a chance to ask Jensen about it tomorrow either way.
Great, and we'll wait for that. Bloomberg's Ed Ludlow. Thanks so much, Ed, for joining us and staying up late there in Las Vegas. Now, still ahead, German inflation accelerates more than anticipated, supporting the ECB's plans to gradually cut interest rates. Pictet Wealth Management shares their outlook for European markets next. This is Bloomberg.
welcome back to Horizons Middle East and Africa. I'm Christine Burke in Dubai. German inflation accelerated more than anticipated last month, backing the European Central Bank's plans to keep cutting interest rates only gradually. Joining us is Frederik Ducrozet, head of Macroeconomic Research at Pictet Wealth Management. So, Frederik, great to have you with us. Thanks for joining us. Let's start with Europe. We had that hot inflation print yesterday out of Germany. Also, we got a hot inflation print out of Spain. What do you expect for today's inflation data, which is the broader European basket?
Well, a bit of noise. Again, it's no secret that inflation has been volatile, not only in the US, and quite sticky, actually, also in Europe when you look at services inflation, the so-called supercore, a component of the HICP. It's 1 month of data. It's clearly not a trend. There's a lot of noise, as I said, especially in Germany around the end of the year and around the holiday season and things like that. So what the ECB really is looking at and will be looking at in today's numbers is still the disinflation trend that you look at in some underlying measures of inflation. I don't think that print will question the direction of travel.
Yeah, and yesterday we did see some pairing of bets in the market for ECB rate cuts over the course of 2025. Where do you see the ECB going in the months ahead and in the quarters ahead?
Well, remember they cut at the last few meetings and the guidance was still very much dovish. The reason being both the normalization in inflation, again, when you look at the trend, it's still going down in core, and that's for now still the case in wage growth as well. Looking ahead, a lot of moderation is still expected. But it's also a question of growth. And here, obviously, the elephant in the room is what's going to happen in the US, tariffs, how Europe can react. The baseline has to be that growth is going to be under a lot of pressure if and when President Trump implements a new wave of trade tariffs. So all in all, I think the ECB is still on the dovish side, and we expect them to cut at every meeting until the summer of this year.
And if we flip over to the U.S. and talk about the Fed and the potential impact of tariffs and trade policies, the Fed has said it will cut twice in 2025, but it seems based on a lot of market commentary that it is uncertain just because we don't know what the Trump policies look like and how that does impact inflation and growth. What is the potential you see over the course of the next year for divergence between the ECB and the Fed?
Well, it's a question of how much divergence. There will be divergence. It's quite certain in our view that the ECB will cut more than the Fed. The question is about the size, the sequencing, the scope of those trade tariffs. It's not entirely true that we have no precedent. We know what happened in 2018 in the US. So at the moment, the moment we know what exactly Trump is going to do across the board tariffs or more focused sanctions and measures that he might impose on some countries, I think the Fed will know. The Fed, for instance, published a working paper a few years ago arguing that they should, to some extent, look through the near-term impacts, which is higher inflation, of new tariffs. So I would expect the Fed to be cautious, to pause in that case. Clearly, there's a strong probability that they don't cut interest rates further in the next few months, perhaps even until June. But then, if you do have tariffs in the US, they will expect a moderation in growth. They will expect the longer-term impact to be disinflationary, and I think they will cut. We have 2 rate cuts in our main, central scenario this year.
Okay, and as we look broadly across markets and consider macroeconomic conditions, what do you think are the top 3 trade risks for you in 2025?
Well, again, the elephant in the room, what exactly is going to happen in the US, fiscal policy, immigration, trade tariffs, deregulation, this is going to impact all the economies and the markets. I would add to this, across the Atlantic, the German election. This is going to be a big event next month with potentially major implications for the longer term in terms of the fiscal policy on that side of the Atlantic. And China, obviously the other elephant in the room, whether the stimulus package that they've been talking about is going to be implemented, how fast and how efficient it's going to be. This is also going to impact dramatically the global manufacturing cycle.
If I could just ask you quickly on the German election, and we are heading for that election in February, do you think that there's potential here for surprise or a change in trajectory for what we're seeing for the German economy in the aftermath of that vote?
Yes, I do. If anything, because, politicians have to stick to the plan and make promises. But once the election will be over, and once we know the composition of the new coalition in Germany, and specifically which party is going to rule alongside the likely conservative government that we expect in Germany, then yes, I think that a more pro-business, pro-European stance is going to prevail, and that some positive surprises could come out of this in terms of fiscal policy being more efficient, more better calibrated for what Europe is going to face in the next few years, especially in terms of the US policies and potentially tariffs.
Yeah, Frederik, thanks so much for sharing all of your insights. That's Frederik Ducrozet, head of Macroeconomic Research at Pictet Wealth Management. Well, coming up, trade tensions between Beijing and Washington are ramping up after the U.S. blacklists Tencent and CATL. We will have the details next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasajja in Johannesburg. The U.S. has blacklisted Tencent and battery maker CATL for alleged links to the Chinese military in a surprise move 2 weeks before Donald Trump takes office. For more, let's bring in Asia EcoGov reporter Rebecca Chung-Wilkins, who is joining us. So, Rebecca, bring us up to speed on this latest blacklisting. This is just a few hours old at this point in time. Talk us through it.
Yeah, absolutely, Jennifer. I mean, it's really dominated conversations on Asian trading floors so far today. So Tencent and CATL, which is, of course, the huge battery maker, both are one of sort of several Chinese companies that have been added to the Pentagon's list of Chinese firms affiliated with the military. Now, it's important to say those two firms, among some of the others that are named, have denied these links. They've said essentially that they're going to try and correct this mistake and have themselves removed from this list. But so far, there is quite a bit of concern spreading through markets today around the implications. Now, it's not entirely clear what they may be. So, for example, it's important to say there's no actual immediate sanction or restriction trading, for example, that is imposed. So effectively, this just means that US firms and US companies are discouraged from doing business with the companies on this list. But clearly, it indicates this expanded list of firms that are being caught in the crosshairs when it comes to US-China trade wars and tensions increasing. Now, this blacklist in and of itself actually is sort of a Trump invention. He introduced it back in late 2020. So there's a question mark slightly over whether or not that, a new administration coming in and Trump returning, that may affect precisely what companies are on this list. That potentially could leave some room for a recalibration or a different kind of decision, but remains to be seen.
And Rebecca, how wide is this spreading for markets right now? We've seen Tencent and CATL have dropped already, but is this spreading further out than just these two companies?
Well, it is having this sort of drag effect on the rest of Chinese equities and some Asian equities, in fact, actually today. And a big reason for that is because both Tencent and CATL are really heavyweights and have this very, very heavy weighting in a lot of key Chinese index. So, for example, Tencent is, in fact, has the heaviest weighting in 2 out of the key 4 Chinese index, onshore and offshore, that we track here at Bloomberg. And so that is having a spillover effect. As far as I look so far, Tencent is still down about 6-7%. And so we are continuing to see this concern. There was a bit of a sort of pullback earlier in the Asian trading day, but, as Europe have come in, we are seeing that concern spread through tonight. And actually, it was reflected in the ADR overnight from the US. So it doesn't look like we're having too much of this moderation effect. Now, saying that, of course, as you'd expect, there are some saying that actually Tencent, according to what it owns says and its business business is not a Chinese military firm. It has no connections to the Chinese military, and this is an opportunity to buy while it's very, very low. And this potentially, is a boon, and that we ultimately may see Tencent removed from the list. Now, this is according to certain strategists, but of course, we've had so many Chinese firms implicated in this wider negative probe.
Yep. Rebecca, thanks so much. We have more coming up next. This is Bloomberg. This is Horizons Middle East and Africa, our top stories this morning. The race is on to replace Justin Trudeau, who's stepping down after 9 years as Canadian Prime Minister. Former Bank of England boss Mark Carney says he's considering a run. Tencent and CATL shares fall as they deny having ties with the Chinese military, saying the U.S. made a mistake by adding them to a Pentagon blacklist. Plus, the dollar in focus after Donald Trump denies a report that his threatened tariffs may be watered down. It has just gone 7:30 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg.
And I'm Christine Berg in Dubai, where it's just gone 9:30 a.m. Welcome to the last 30 minutes of Horizons Middle East and Africa.
Thank you for that reminder, Christine. But still, there is a lot that we're paying attention to news-wise, and of course, a lot that the markets are paying attention to. Really want to put in focus what was in focus on Monday, and that was that news we were talking about, Trump's potential softer tariffs. Of course, he denied those reports after the fact, but we did see yields really reacting to that, and now sort of having a bit of a shift. If we take a look at the U.S. 30-year yield right now at 4.83, but on Monday we did see the U.S. 30-year note actually surging to its highest level in over a year. Also seeing some reaction, as we mentioned, the dollar a bit. It was paring its losses after Trump did deny that. The Canadian dollar also in focus after we did get that resignation announcement from Prime Minister Justin Trudeau. The Canadian dollar seeing its biggest one-day gain since September, actually. Brent also have that on the board, sitting right now at about $76.32 a barrel. Right now, we did get some technical markers that showed the recent rally actually may have gone too far, but still trading within that range that we've been seeing. And we've been talking about this for the past few minutes. Nvidia, really the focus this week for the tech world and what we're seeing from CES. But right now, as our MLive team notes, not necessarily having an impact, at least on NASDAQ futures, but still, Nvidia is still a powerhouse when it comes to the market. The company is close to retaking the top spot as the world's biggest stock in market cap. As we were talking to Ed Ludlow earlier, we'll wait to see whether or not investors are really able to digest some of those announcements and the news that we did get from Jensen Huang not too long ago. But let's check in on how markets in Asia are faring. Avril Hong is, of course, standing by in our Singapore studio. Avril, what are you watching?
Yeah, Jen, we've been talking today about that divergence between Japan's topics and Hong Kong's Hang Seng, with the stock of Tencent slipping to levels we haven't seen since mid-September after its inclusion on the U.S. Defense Department blacklist. Meantime, the topics is running higher today thanks to the surge in chip stocks, banking names, the weak yen. So I thought I'd highlight this chart courtesy of MLive's Mark Cranfield, which shows you the outperformance of the topics versus the Hang Seng. This is a trend we've been seeing recently, and indeed for March of last year, at one point the topics was outrunning the Hang Seng by about 20%, but this kind of reversed after the great carry trade unwind and after the big stimulus package that was unveiled in China as well that helped the Hang Seng to outperform. More recently, this topic's outperformance is a good start to the year. We have some strategists talking about how they expect record highs on Japanese stocks because of these corporate governance reforms and robust earnings. It'll be interesting to see if this dynamic carries on for much longer as far as Japanese stocks are concerned, guys.
Thanks so much, April Hong in Singapore for us. Let's turn to this news we got on Monday. The global research firm Eurasia Group has published its annual report predicting the top global risks for the year ahead. We're joined now by Ziyanda Stuurman. She is a senior Africa analyst at Eurasia Group, joining us from Cape Town. Ziyanda, great to get you back on the show. So I really want to start with the first risk that we got from the Eurasia Group. It is a G0 world. Talk to us about what that is and why that was chosen as the top risk for you and your team.
Great, absolutely. So, the way that we think about a G0 world, one in which there's, to a certain extent, zero gravity, is really that many of the institutions that have underpinned the international security order, the international economic order, are no longer what they once were. And that's a good and a bad thing. These institutions such as the IMF, the World Bank, the UN Security Council, don't necessarily represent, where power and global dynamics are today. Certainly didn't in the 70s and later when they were created. But that really means that there is a level of contestation and agitation for more representation generally of the global south, but also where there is a great power contestation between the US and China, for example, within those institutions still. And many of the world's whether you sort of call them middle income countries or swing states, and here I'm talking about Turkey, Brazil, South Africa, India, they're all looking for a new placement and a new way in which the world should work. And this, I think, very fraught period, in global politics, where you have Donald Trump returning, somebody who famously is not interested in multilateralism. That moment meeting this one that we're in now, in which these institutions are being forced to change, really, I think, has driven what we see as an underlying cause of again, that zero gravity, or at least an underpinning, a weakening of the underpinning of many of these institutions that really have shaped the way that the world has worked in recent decades.
Ziyanda, how does that trickle then into the global south and some of these other countries you were mentioning, South Africa and Turkey? Is it an opportunity, or is it potentially even more of a risk?
It really is a double-edged sword. I think that there is plenty of opportunity, again, for many of these kind of middle-income or swing states to really assert themselves going forward. Again, you think of an India and its trajectory and where it's heading towards the world's, economic stage and its own ambitions. But at the same time, it is really difficult for smaller countries who have less access to, again, global financing systems, and especially those in which really large and important geopolitical decisions are being made, such as the Security Council. It's the less representation you have of those countries in which, again, this new world order really has a particular effect, and one that is disproportionate to, your larger economies. I think the harder it is to kind of keep the semblance of global norms, again, a general world order in which there are rules the countries are meant to play by, and that handbook goes out the window. And I think, again, that's very, very difficult territory to navigate for countries that feel like they are caught between one side and the other.
How do you determine then, Ziyanda, Africa's greatest risk? Because, of course, a global war, a chasm between the world order will, in and of itself, affect Africa. How do you think about the continent then in that factor?
I think, interestingly, we're already starting to see what that looks like. We're with what we've identified as a top risk 7 and top risk 9. The first being, a kind of Trump-induced economic slowdown, just as you were talking about in earlier segments around this unpredictability, around Trump's views on tariffs, the will he, won't he of that uncertainty is very, very difficult for countries that are looking to expand their export markets or are almost dependent on them largely. And there are a number of those countries that are on the African continent that are going to struggle, I think, going forward to navigate, very difficult changes, again, in economic policy and trade policy, and the unpredictability that comes with that. And then on, looking at another angle, is this where there is a lack of leadership on the global stage in terms of a lot of these security issues. We're already seeing that in places like Libya and Sudan and others on the continent, and that becomes even more pronounced, even more difficult, essentially to intervene within, unless you're looking at particular actors. And here I'm thinking about the United Arab Emirates, for example, and other countries that have their own specific national interest or economic interest intervening in a way that, again, is not the same as a UN Security Council or UN mandated forces being involved in certain conflicts. So it's to use an old adage, we certainly are in a very, very different new world, and one in which I think some of us, and particularly I think in the global south, will struggle to grapple with.
And finally, Ziyanda, can you talk to the humanitarian aspect of that? Because that was also something that you and the team noted, especially on the continent and in the global south.
Yeah, I think it is going to be difficult going forward to sort of work again along these lines of multilateralism to really have global cooperation and just a sort of common framework or common agenda going forward. And once that is the case, there are different directions, different interests pulling in different ways, and that's at the end of the day, I think the exact environment in which markets are the most unsettled and the most, sort of not directionless, but certainly being pulled in different directions. And it's never particularly positive where there is that much uncertainty, volatility, and unpredictability. And I think worse so for several African countries and economies.
It's a fascinating report. Ziyanda Stuurman, great to get your insights on this morning, the Senior Africa Analyst at Eurasia Group, joining us from Cape Town.
Well, Saudi Arabia has started 2025 with a borrowing spree as it looks to fuel its vast economic transformation plan. The kingdom sold a $12 billion denominated bond with combined investor bids exceeding $30 billion. Now, to unpack all of this for us, Abir Abu Amar, Bloomberg's Deputy UAE Bureau Chief, joins me now on set. So, Abir, Saudi really got down to business on the first Monday of the full week of the year. We had activity from the government, the Sovereign Wealth Fund in the form of the PIF. Walk us through the activity that we saw yesterday and since the start of this week.
It's true, Christine. Happy New Year. And
yeah,
happy
you too.
Saudi year. Because we started Monday yesterday and the flood of the bond news came. Let's walk through this through chronological order. And what happened was $2.5 billion in a credit facility that was issued last week. That was followed by a $7 billion Islamic bond issuance by the PIF, the Kingdom's Sovereign Wealth Fund. And then last night, early this morning, we knew that the sovereign bond, a three-tranche sovereign bond, was valued at $12 billion. Now, Christine, earlier last week, the Kingdom said that its financing needs are going to be around $37 billion for 2025. This comes in the context of Saudi Arabia wants to finance its budget deficit. We were in Saudi last year covering the budget conference, and we know that the Saudi budget for this year is going to be just over 100 billion riyals. That's 2.8% of GDP. Now, that's, part of it is to finance this budget deficit, but part of this financing is also to fund what we always talk about, these massive, massive project outlays, NEOM, the World Cup, Expo, all the fun stuff that is happening in Riyadh and in the wider Saudi Arabia.
Yeah, and it's not unusual to see governments, corporates coming out early in the year and issuing a flood of debt to the market. Saudi Arabia was one of the biggest borrowers last year in emerging markets. I think it was $17 billion. Already, though, we've just seen $12 billion. So what does that say about the prospects for this year and the funding needs for the government?
No, you're absolutely right. I mean, and I think something that we were also talking about yesterday was the fact that, Saudi Arabia did a similar move last year, where it issued very early in the year. So I don't think the timing should be read too much into. It's just a matter of Saudi needs financing. And listen, we know that Saudi said there were going to be spending cuts in the budget. There were going to be spending cuts for the coming couple of years at least. So we know that these, the deficits, the shortfalls in the fiscal account need to be financed. 12 billion so far, 17 billion is only sovereign issuances. Now, if you were to add up all the GREs, if you were to add up the PIF and the NDF and, all the government-owned entities and related entities, the issuances of Saudi Arabia just in bonds came close to $50 billion. So we're still a long way from the $50 billion that we saw by the end of last year. But, Saudi is in a very comfortable position when it comes to its net debt to GDP ratio at 30 to 35%. That's obviously much lower than other countries in the developed world where we see, over 100% of net to GDP. So still very comfortable positions in terms of that metric.
Well, Beer, thanks so much for unpacking all of that for us. And it sounds like the Saudi debt issuance story is going to keep us busy yet again in 2025. That's Beer Abu Omar, Bloomberg's Deputy UAE Bureau Chief. Well, coming up, Ackerley Sports Group pursues a new deal for the commercial rights to the world champion Springboks rugby team after its first bid failed. We will have the details next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasajit in Johannesburg. Ackerley Sports Group is to pursue a new deal for the commercial rights to the world champion Springboks rugby team. That's after an initial bid for the South African organization failed. Let's get more with Bloomberg's Anthony Squazine, who is here with me in studio in Johannesburg. Anthony, thanks so much for joining us. So, we're in South Africa. We know just how big the Springboks are for the rugby industry broadly. Why is there such a tussle, though, over the commercial rights? This has been going on for quite a while now.
Yeah, for at least a year.
Yeah.
I think really it's because the Springboks are probably one of the last of the Tier 1 rugby nations. There are only about 6 or 7 that hasn't got a PE deal, that isn't really marketing its brand outside its home country. I mean, the Springboks are well known, but you don't really see them competing as a brand like you do with the All Blacks from New Zealand, or perhaps the British home nations as well.
So then why has there been a failure then to reach a deal? What does this get down to?
Well, the deal Ackerley offered was criticised a lot by the member unions of the South African Rugby Union, which is where the money really lies. They basically felt that the $75 million offered by Ackerley was offered on not very attractive terms. It wasn't enough. And they also criticised the transparency of the deal, which was sealed between Ackerley and the management of the South African Rugby Union rather than its member units. They felt they weren't consulted enough. And they feel they can offer a better deal. And indeed, another deal has been put forward. But the perception is that you probably do need an international partner like Ackerley. So perhaps they'll come back with a better offer, local partner, and it may be concluded.
Is the expectation then that there will be a deal reached? And I wonder how then does that affect the team itself, especially when you think about PE and how its effect on sports?
Well, I think a deal has to be reached, not necessarily with Ackerley, but with somebody, because in late November, early December, the South African Rugby Union laid out its finances to Parliament, and the organisation is barely breaking even, which is quite amazing considering, they basically have the double world champions. But they're not making any money. So they need to commercialise, sell more shirts, market themselves better, and basically look to merchandise to boost their revenue. And Ackerley could perhaps help a lot with that, given that they have all these teams in the US. They have a stake in Leeds United football team in the UK, and they have international experience.
Any other bidders you think will come?
Well, I think basically at the moment we're looking at Ackerley and the South African various groupings, Altfest, and groupings backed by some of South Africa's richest men, Johan Rupert, Patrice Motsepe, Stephen Saad. but are they actually, do they have much expertise in marketing and sports merchandise? Perhaps not. So they'll probably look to have a partner. And there have been other PE groups who have invested in other rugby teams internationally who have looked at South Africa before.
Fascinating. We'll see where it goes next. Definitely a lot of Springbok fans watching for that. Bloomberg's Anthony Squizine joining us here in Johannesburg. Anthony, thanks so much. Now, for a look at some other stories we're following this morning. ArcelorMittal is closing its steelmaking business in South Africa, leaving around 3,500 jobs at risk. The Johannesburg-listed subsidiary of Lakshmi Mittal's multinational group says production will likely stop by the end of the month. The company blames persistently high logistics and energy costs, coupled with insufficient government policy interventions. The move will come as a blow to South Africa's business-friendly coalition government as it tries to revive economic growth. Barrick Gold says it will have to halt mining in Mali soon if the government doesn't stop disrupting exports and operations at its mine. The world's second biggest gold producer is locked in an acrimonious dispute with authorities over how to divide revenue and profit. The miner says an interim attachment order has been issued against the gold stockpiles on site. This comes as the company already faces an ongoing block on exports. Barrick has initiated arbitration proceedings against the government and is seeking a resolution within a week to avoid suspending operations. Now, coming up, artificial intelligence has taken the world by storm. We look at what's next for the technology as new applications emerge. Stick with us. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Christine Burke in Dubai. Well, Bridgewater Associates dismissed 7% of its workforce on Monday, according to Bloomberg sources. The cuts affect about 90 employees at the world's biggest hedge fund, which is seeking to remain lean and maintain flexibility to hire top talent. In a statement, Bridgewater says it has been focused on rapid evolution and is holding a high bar and also keeping the organization nimble. Sources say a consortium backed by Apollo Global Management and BC Partners is close to acquiring a controlling stake in GFL's environmental unit. The deal could value the business at about $5.6 billion. GFL may retain an option to buy back the shares at a later date. Prices for the most sought-after used watches from top Swiss brands Rolex, Patek Philippe, and Audemars Piguet fell again in 2024, hitting fresh three-year lows. The Bloomberg Subdial Watch Index declined nearly 6% last year. It tracks prices for the 50 most traded models by transaction value. The market for pre-owned luxury timepieces soared in 2020 and 2021 during the pandemic, before suffering a sharp pullback in 2022 amid slowing economic growth and higher interest rates. Well, let's get a look at these markets as we head into the end of our show here. If we look at U.S. equity futures, I want to note that we have seen losses in the U.S. market pick up over the last 30 minutes or so. Markets heavily focused on tech and potential headlines coming out of Trump's trade policies. We have the Euro Stoxx 50 futures also nudging lower ahead of European inflation data coming out a bit later today. Inflation expected to pick up in that report. But really where I want you to focus on at the moment is the U.S. Treasuries market, because yesterday one of the big stories coming across was that we had yields jumping higher. This morning, though, we are right back down almost to where we began the day yesterday. The market was really reacting to Treasury auctions that were going on and also some Fed speak coming out around the trajectory for rate cuts over the course of 2025. And then lastly, we have Brent crude and WTI crude moving a bit sideways today, but we did get a big jump in Brent last week. The market now looks a little bit like it may be in overbought territory. Well, that is it for Horizons Middle East and Africa. I'm Christine Berg in Dubai with Jennifer Zabajaja in Johannesburg. Make sure to stay with us for Daybreak Europe next. This is Bloomberg.